Hello, and welcome to the World Built Environment Forum webinar series. Today's topic is how data is changing decision-making in real estate investment. My name is John Krause, and I'm the Director of External Affairs at RICS. Increased data availability, reporting and analytics will have the greatest impact on real estate of any form of PropTech. At least that's what the findings of a recent RICS survey, the Global Commercial Property Monitor, would suggest. With us to discuss these developments are three industry experts, and they're going to introduce themselves now. So firstly, Dan Hughes, the CEO and co-founder of Liquid Real Estate Innovation. Welcome, Dan.
Good afternoon. Great to be here. Thank you very much for having me. And yes, Liquid Real Estate is an organisation that helps to understand the future of the real estate sector. And we have a particular focus on data and technology and how it's going to be affecting the sector going forward. So very much looking forward to this conversation.
Secondly, I'd like to introduce Neil Webster, Director at Remit Consulting.
Afternoon, everybody. Remit is a boutique management consultancy for the property industry. So we look at business transformation, systems and compliance, and underpinning that is research. So we've been privileged to be involved in two of the recent RICS papers, one around technology and the most recent one about the RICS.
And thirdly, Patrick Rafferty, who is Vice President of Product at Reonomy. Welcome to Patrick.
Yep, thank you guys for having me. So by way of introduction, my name is Patrick Rafferty. I'm the VP of Product at Reonomy. Reonomy is a commercial real estate data platform that's been around for just about 6 years at this juncture. To date, we've raised just south of $70 million in venture funding. And essentially, we are a data aggregator here in the United States. So just as a point of clarification, we're not currently in the UK. But excited to be here and excited to talk about the applications of data in the world of commercial real estate.
Thank you to Dan, Neil, and Patrick there. So a good range of insight there that we're going to be able to draw on in the next hour or so. So to get the ball rolling, we're going to spend the next 15 minutes or so looking at the current and future use of data. And so my first question to the panel then is, how effectively is data currently being used by the real estate industry? And if you can give us a couple of really powerful examples, that would be really good. So who wants to go first? Let me ask Dan first.
Sure, thank you. So I think there are different ways that you can approach the question. I think that data is something that drives most decisions in the property sector. And so I would say that at one level, the real estate sector is pretty good at using data. So if you look at things like MSCI data, or if you look at some of the initiatives such as CoStar that are established, or in the UK from a cost point of view, you've got things like BCIS. There are an awful lot of very well-established data organisations that provide information for different parts of the sector. What I would say is that it's often very much about relatively simplistic data that's then there for humans to interpret. So I think from a in-computer analysis point of view, we don't use it that well. I also think that we haven't yet got to grips as a sector with the sheer volume of data that's being created. So most of the data that we are using, whilst it might be kept up to date, the data itself has existed for a number of years. And there are now so many more different data sets that are out there that can be used to inform decision making, to reduce risk, and to feed into the investment process. We haven't always got to get grips with some of those. And examples of that can be multiple. So whether that's footfall, whether that's credit card information, or whether that's looking at the temperature changes in a particular retail environment, then all of these data sets haven't traditionally built into the process that we have used. The other thing I'd say is that we're very good at using data that's collected within a small silo. Traditionally, that's based around the life cycle of a building, and we use it within that silo. What we're not very good at is using the data that's created in other silos. And that's because historically, again, it's been very difficult to join up. But more and more, there's an opportunity for us to use data that's created earlier in the life cycle for the future decisions. And the best example of that really is BIM. BIM is building information modeling, and it's all about creating a data model, a digital twin of the building itself or of the property, and you can keep that data throughout its life cycle, and then you can improve decision making. So I think at one level we are using data. We're absolutely a data-driven sector, but we haven't yet caught up with the amount of data that's being created on a daily basis, both that's newly collected but also from other sectors. And I think the ability to analyze that is going to really allow a very much more powerful decision making going forward.
So lots of potential there, lots of data available, not necessarily always kept up to date, somewhat siloed. Are we using the best use of the technology to really maximize the power of that data? I wonder, Neil, how do you think we're using data effectively or otherwise in the real estate industry?
So to support a lot of what Dan says, I'd say we're certainly getting better, but by no means in excellent form. In the survey that I refer to, we looked at sort of 4 components. So one was a single building, second was the portfolio level, third was market level, and fourth was the broader economy. And people felt that the 2 areas where improvement was required in use of data was at a single asset level and in the market. And the other way of segmenting it is that we looked at data which was held internally by organisations and, as Dan refers to, is sourced externally. I still think, certainly in the corporate real estate field, in both the public and private sectors, it's the internal data that people still struggle with to some extent.
Okay, so issues there around internal data in particular. And Patrick, how do you see the situation?
Yeah. So I agree with both of Dan and Neil's characterizations. I thought they summed it up well. Especially Dan's point that we are a data-driven industry, although it's kind of for very simplistic formulation. So I guess the way I'd answer it is I would say commercial real estate isn't very far along in its data journey, I would say, to comparable industries. And one thing that I hear a lot with the CIOs and the CTOs that we work with is they are constantly comparing themselves to basically hedge funds or quant-based hedge funds. And it's sort of born out of the recognition that these hedge funds have been successful in using and harnessing a lot of external data to basically power algorithms that basically drive the investment process or the decision-making process. The reason I think that commercial real estate sort of lags behind comparatively, at least here in the States, is because commercial real estate is a bit of a data backwater. I mean, all the data that a real estate professional needs in the United States is not always readily available. At least the data that's in the public domain, there's a tremendous amount of sprawl basically across the lower levels of government. So a lot of the data is at the county level, and there's 3,200 different counties all doing it a different way. Some of the data is at a city level, and there's 20,000 different municipalities. And then to top it all off, you have a lot of data that you need that isn't in the public domain, such as leasing data and financial data that you just can't get to. So, when comparing it to the world of hedge funds, which is sort of the point of comparison I hear a lot, it's like, well, if you're building an algorithm to trade on stocks, a lot of that data is out there because it's a publicly traded company and there's disclosure requirements. Commercial real estate, we just don't have that. And that's sort of translated to a culture that's not as technologically as forward-thinking, at least in my view. So that's sort of how I'd characterize it.
So it seems to be the case then that there's a lot we can still be learning from others, the financial sector, hedge funds in particular, about how we can capture data and use it intelligently, and also some major challenges over the fact that data is stored in different ways, captured in different ways at various different levels, which makes it clearly very hard to access in a way that makes it usable. I'm going to come back to that in a moment, but first, I'm going to ask the audience now a poll question. So you should be seeing on your screen a poll question which will come up on to you now, and the poll question says, I'm just looking at the question here. You're asked to agree or disagree whether data technologies will transform decision making in the future in the real estate industry. So what do you, the audience, think about that? If you could answer that quickly, we'll get pretty much an instant return. And I'll also just say at this point for the audience, you do have the option of submitting questions to our panelists via the platform, and we will cover them as we can. So I'm just going to check the poll responses now. Okay, so what we found to that question is that we've got 44% strongly agree with the proposition, a similar number, 44% agree, and really only a tiny minority therefore disagreeing. So similarly, 88% agreeing. So probably what you'd expect, but still a few people doubtful that technologies are really going to transform decision making. So I'd like to ask the panel for your responses to that. Does that surprise you? And why do you think some people would disagree? Perhaps Neil, I can ask you first.
I guess I'm not so much overly surprised at the responses. I think, if I can be frank, some will disagree because, not referring to the audience, but some will disagree because they've perhaps got their head in the sand in relation to what's going on around them. So there's a lot of disruption in the market, and 88% is a pretty strong response to me.
Who else would like to comment? Patrick, perhaps.
Yeah, I don't think that response surprises me at all. I mean, there's been a tremendous amount of funding that's gone into commercial real estate technology, really in 2013 and 2014. I forgot the precise figures, but there's a lot of money chasing these companies, and I think that there's a lot of innovation that has followed or emerged as a consequence. So that doesn't surprise me at all.
Thank you. So I'd like to ask Dan for your reactions to that poll. And also, Dan, if you could answer the question we have on the screen now, which is leading into the next part of the discussion. Which data technologies will have the biggest impact on the real estate industry? You mentioned BIM earlier and one or two others, but what are the technologies that are really going to make a difference?
Sure. So I think if I start with the poll, then I would say that's pretty encouraging in many ways. I think if you'd asked that probably 5 years ago, you'd have had a very different response. And I think it's really encouraging. I think building on from what Patrick was saying earlier, and I agree with everything he said, but I think that comparing to things like hedge funds, real estate's got another slightly different characteristic on top of what Patrick's point was about the different types of assets and how publicly available the data is. And that's really looking at liquidity and how fast things move. And if you're talking about buying equities or stocks and shares, then you make a wrong decision and tomorrow can cost you a lot of money and you can get out of it very, very quickly. From a commercial real estate point of view, things move much, much slower. So leases tend to be over several years, construction takes several years, you own for a number of years before you get your money back. And so there's been a real lack of speed from a property point of view in the ability to make decisions. And therefore, some of the data that's out there that can support these quick decisions just haven't had a return on investment or a business case. If you buy the wrong building, and I tell you it's the wrong building the day after you've bought it, there's really not a great deal you can do about it. In an equities environment, then absolutely, if you buy something and you made the wrong decision, you sell them quite quickly. And I think that that's starting to change. So we're seeing everything getting quicker, and that's very much technology driven. So the decision-making process is starting to become more and more influenced by data. In terms of the technologies that are going to be used and have the biggest impact, I guess there are a few different ways of answering that as well. So the first thing I'd say is I don't think there is one technology that is going to have a major impact. I think that they will all work together. So if you start looking at the technology side of things, that's probably the wrong end of the discussion to start. And it's very much more about how do we want to make better investments or better decisions or lower risk? How do we want to increase rents? And the answer to all of those will be a combination of different technologies. I do think if I had to pick on one, then I would say that the ability to analyze data, to extrapolate out information and infer things is going to be the major thing. And that's the real analytical element around things like artificial intelligence that are out there. Now, I think artificial intelligence is a phrase that is used too often. And so actually, artificial intelligence is a long, slow process, and it's going to be a long time before the robots take over the world. But I do think you can take data sets to then put into a computer which can do analysis that a human just can't, which can then infer other data sets and insights that we haven't been able to make decisions on in the past.
Thank you. A very comprehensive answer. Patrick, would you say that it's really going to be a mixture of technologies that really make a difference, or would you be brave enough to pick out one that you think will be more impactful than the others?
Yeah. So I do agree with the notion that it is going to be multiple. I mean, at a high level, I think there's two, and I think the first sort of maybe isn't that sexy, but it's basically generic SaaS or software as a service, basically workflow type products or data capture technologies that basically help clients organize essentially the first-party data that they have. And I'll give a concrete example of what I mean by that. I used to work in valuation and advisory. I used to be collecting a tremendous amount of data basically on market activity like comparable sales, competitive surveys, etc. I was storing that. I was basically pinning that data in Google Maps, right? Like it wasn't centrally stored or organized. So I think SaaS products are going to basically help people sort of manufacture a lot of data and make sure that it's organized. And we're already starting to see different technologies emerge there. I mean, as far as SaaS products for investors goes, you have VTS for asset management, Honest Buildings for capital project management, and DealPath for acquisition. So that is already starting to happen. And I think that's a big step in terms of progressing along the data journey, because that's sort of how you get all your own data organized in the first place, right? Then I think once that problem is solved, you can sort of move to that second order problem of analyzing it or using that data to maybe make predictions. And that, I think, is where, to Dan's point, I think machine learning and data science is going to come in. So we've seen as an example of this, like we work with a number of brokerages, and once they sort of get all their data sort of arranged, they have, like maybe in a CRM, they can basically start to come up with things like which of these clients are likely to sell right now. And they're doing that based on how many interactions they've had. They're using Reonomy data to say, is this owner selling or buying right now? And they can basically make a prediction there. And so we're starting to actually see, like I was talking to, McKinsey, a top-tier consulting firm. They actually have now an engineering group, a data engineering group, and a data science group who's starting to focus on the world of commercial real estate specifically and develop subject matter expertise there to basically help commercial real estate clients apply data science once they've sort of organized their own data. So those are the trends I see at play.
Thank you. So interesting idea there. It's kind of a first order problem, which is around getting your own data house in order, as it were, and the second order problem of then how do you analyze it to make use of it. I wonder, Neil, do you want to just add a few words on which technology is going to have the biggest impact?
Sure, and I think what I'll pick on is the data word rather than the technology word, which supports your point, which you just summarised there, which was about getting your own house in order first. So understanding, what you need to report on and what digital strategies you need to have in place in order to produce, better and more relevant information internally. If you want me to comment specifically on technologies, I think the ones that I would focus on, apart from listing all of those that are in the report I referenced earlier, which are more property focused, are those around information that has an importance and it affects decisions, which isn't actually property data. So there's some interesting examples we put in there about the analysis of flow of people on Oxford Street, which are traced by smartphones and by credit card transactions, and not about building technology about people coming in and out of buildings, but showing the impact that one's spend has on the value of real estate and the utilisation of office buildings based on simple movement of people. So that, I think, is relevant and is the external piece again, and isn't what you might describe as traditional property data.
Thank you. So I want to move on to our next question, which is around what can businesses do to understand and make the most of data. And I'm looking also at the questions submitted by our audience. And here's a typical question, which I think it very much feeds in with the question on the screen, from Mark Maines in Miami, who asks, how is data being used in terms of selecting or predicting the best locations for new businesses? So I think two questions that go very well together there. Who would like to answer that?
So I can jump in, particularly with that second question on how is data being used to basically help different businesses to select locations. So one company that we've gotten to partner with at Reonomy is WeWork, and they have a fantastic data science team. But they've basically gotten to the point where they can score locations basically at the level of a building and say, what is the likelihood or what could we expect the performance of a WeWork to be at this particular location? And they are starting to rely on that heavily to basically fuel their expansion strategy. And the way they do that is they're combining a lot of their own first-party data, so data they have obviously on WeWork performances, and they have obviously a lot of that. And then they're also combining that with external data. So things like Reonomy, some of the things that Dan and Neil have mentioned in terms of credit card data. Here in the States, they would use census data. So they basically mash a lot of data together and then are able to come up with a score to predict how well a WeWork would perform. So that's sort of an example at the extreme that I've seen, since WeWork is obviously very well capitalized. In terms of, well, I guess I'll stop there. So yeah, that'd be my one example.
Who would like to add to that?
I'll happily jump in, John, actually, because what's being raised there is, you said about making better decisions about location. So we turn that on its head. And if you are the location, you are the city or the place which is trying to attack real estate investment, you need to tell a better story. So, regeneration type entities around placemaking are getting much better at a finer grain of detail which is relevant to that business which is investing there and is able to sell that location better than it could do in the past. It's still got a little way to go, but I think you're getting a better analysis of the data that exists about the population, about the socioeconomic structure, and you're getting authorities, public bodies, who are better at showing that they're a place to attract investment because they can prove it with the data.
And Dan.
Yeah, so I think there's some great questions. If I start with Mark's first, then I think the answer is a lot more data is being used in a lot of different ways. If you look at an office building, then a number of years ago, 10 years ago perhaps, the real deciding factors about an office were what's the prestige, what's the cost of it, and is it big enough to get my employees in? And those were the real drivers behind that. And it's not surprising that because of that, the real estate sector has looked at using data sets that support those decisions. So it's comparables of rents and capital values. It's about city level, where are they, or what's the postcode, and it's about sizes. Today, if you look at an office, people are using it so much more for keeping staff or for attracting staff. They want to really make their people happy and to be productive and to be engaged and to make sure that transport times are reduced. And so all of these data sets have never really mattered to the decisions we were making a number of years ago, but are becoming much more important. And so as they're becoming more important and the data sets are becoming much more available, then we're using it much, much more. There is a long, long way to go. It's far from true to say that all decisions are beautifully crafted across data, and there's still a huge amount of human interpretation. which I think is going to remain for the future. But there's no question that data is already starting to become into some of these conversations, and I think Patrick gave a few examples of those. In terms of what can a business do to make the most of data, this is a huge question. The one thing that I would encourage everyone to do is at least think about it and engage with it. Data is often treated like property, and it shouldn't be, and it's often seen as a really complicated topic, and it can be. To do real data science can be very, very complex. But just to go through some very basic questions as a business about what data do we actually need and what data do we have is a really good starting point for a business to start engaging with the data conversation and exploring it.
Okay, thank you. So I'm going to move on to the next question because this is where it starts to get a little bit more rubber on the road, as it were, and real decisions. We talked about, how we can understand data, the technologies that are out there, the opportunities that are there. But actually, in fact, how in practice are we going to use data to make better investment decisions? When it comes down to it, what are we going to do that people are going to see that's different in how we're making decisions? Who would like to answer that?
So Dan here. So let me carry on and try and give that a couple of answers. So I think the first thing that Patrick alluded to earlier, which I completely agree with, is there's a whole internal how do you run your business type of thing. So you can use data and technology to really make your business much more efficient, but also through collating and collecting lots of different data sets, you can make a better understanding of what's going to happen in the future. Of course, you can't predict the future, and there's a question that's coming in about that, which maybe we'll touch on later. But what you can do is you can start much more modeling what's likely to happen and therefore make better informed and lower risk decisions. The second thing is that you can actually start using data and data from the buildings itself to start inferring about how they're reacting and then improve the performance of that building. So we mentioned BIM earlier, but even at a very basic level about client satisfaction or customer satisfaction within a building, you can collect it very easily now on apps, for example. And once you understand what parts people are happy with and what they're not happy with, then you can start changing how the asset itself is performing to start adding value very, very quickly. So I think there are two clear areas. One is very much within the business as an investor. You can use data to inform the decision making to make it lower risk or better predictions. And also you can make the building itself operate better, which obviously in turn adds on to the value.
Okay, so we've got reducing risk and adding value through better performance. Of course, whether that value is actually realised in the market might be another question. What does Neil? What do you think about this?
So logically, better use of data should lead to better investment decisions. But that comes down to, as Dan and I think Patrick has said, getting the right data and using it in a smart way. So if I could turn that around as to an example of where poor processes lead to poor decisions, we interviewed an investor who, at the time of, I forget who it was, I think it was Homebase, were going through their financial difficulties. I think I'm right in saying their process was they read the Times and headlines that this business is not in great state. They then say how many of our units have got these guys in. They can't find that data straight away. Days later, they find out that these guys are in 10 of their units. So there must be a better process that underpins the data that leads to a faster decision and therefore logically a better and timely and more efficient outcome. So some of that needs to change.
Yeah. Okay. And Patrick.
Yeah. So, I mean, if you look at the way people are making investment decisions, at least based on what I've seen, I mean, typically what they're doing is a discounted cash flow analysis, right, where they're basically modeling out, what every single line item is going to be, which is an assumption-laden approach. So at a high level, I think as data availability continues to increase, data completeness continues to get better, data quality continues to get better. I think people at a minimum are going to be better at basically formulating assumptions with higher quality data. But I also think it could even go further, like I was at a conference last week called Realcomm. It's a CRE tech conference here in the States. There's like 280 booths, and I think half of them were around basically energy efficiency, which is essentially what they were doing is helping owners of big buildings essentially modulate their energy-related costs, but also forecast them, right? So by using that technology, you can probably get a better idea of what those costs are going to look like in the future. I also saw people discussing, and I don't think it's being done yet, but basically using data to inform how likely a particular tenant is to renew, looking at things like, the Yelp reviews, different types of metadata available on the company to say, what is the chance that this tenant is likely going to renew, and that will obviously allow you to make better assumptions in terms of modeling out the cash flows of the property.
Thanks. I just want to throw in for one of the panelists to respond a follow-up question here from David Thompson, who points out that analysis of data looks backwards in time because it's what we know and seems to be about risk aversion. Isn't there a danger that analysing lots of data means that everyone just makes the same decision about the future, thereby reducing the scope for innovative risk-taking, which might be better at creating wealth? So this problem of data that's perhaps historical and not forward-looking. Can I ask one panelist to comment on that, please?
Yeah, it's Dan here. So I'll try and tackle that one. It's a great question. So the majority of data that we use in real estate is either real-time or historic looking. But what you can do is you can start looking more and more for patterns and connections and relationships between the data and then what goes on to happen. So for sure, predicting the future with absolute certainty is impossible, but it does start becoming easier to start understanding what it is, so the margins of risk going forwards get reduced. So I think certainly data analysis can be extrapolated out into the future and can become much better at predicting what's going to happen, even though it's not perfect. In terms of the human judgment, my view is that there will always be different human judgments involved in a number of different ways in the overall investment process. And I think that part of that will be things like risk thresholds or type of criteria that people want to go into, how they set those parameters for the data analysis to be done into. So personally, I think that there will be a huge amount of automation of some of the number crunching type of stuff that Neil was alluding to earlier. But the actual decision-making, advisory judgment element of the human part that exists today will very much exist in the future. I would actually argue it's likely to grow in need.
Thanks.
So
I'm going to come.
that.
Yes, do please. Yes.
So I was going to do it by referencing a book I read recently. It's also on Radio 4. So Hello World by Hannah Fry, and it talks about algorithms. She's a mathematician from UCL. The conclusion of the book is the human intervention or the human input into this cleverer use of data, as Dan says, will be as, if not more important in the future than it is today, because we need to understand where this data is coming from. It is the same as you can't use a calculator unless you can do maths yourself.
Thanks. And we're going to come on to this actually in the next session, a little bit about skills and challenges. And I know we've got one or two questions on the forum about that. So, but before we come to that, I just want to move on to the next question, which is about cities, because I think it was Neil earlier who alluded to the need for cities to tell a better story and how they could use data to do that. So my question then, and this is really aimed at Neil, is can the use of data help us to build better cities and towns? So getting above the single asset to the whole built environment that people occupy as a community.
Well, I'm going to sort of clarify the question a bit, John, if you don't mind, because the question says, I think, build better cities. Well, before we build better cities, we need to plan and design them. So whilst, yes, we can use a lot of data and some technology in the construction of them, I think if we're going to produce better cities, if I reduce that build word with produce, then we need to be cleverer in that planning and design phase. And I think that there's some really good stuff around, and this is going to be my first buzzword, but plan tech is being used at the moment to look at way in which technology can improve the whole of the planning process. The planning process is clunky. It's got a lot of PDFs being used, and it's got a lot of manual processes in it. And actually, our planners could be giving a greater value to the proposition if a lot of this manual element were taken away. So that's simply one component about building better cities and towns, and supports my hypothesis earlier on, which is that the cities and towns also hold data which can be used to improve their towns and cities as well, or their places.
Dan, do you want to add anything to that?
So sorry, I was reading through the questions, but from what I heard, I agree. I think that the real estate sector has tended to look at, in fact, the whole built environment often looks at cities, buildings, infrastructure as very separate entities, and of course, they're all absolutely inextricably linked. And as the sectors tend to blur, then the ability to use data to improve all of those is and tie those together and join those different bits together is increasingly important, and I think something that's already starting to happen a lot.
Thank you. So we're going to move on now to skills and the challenges that come with that. And so we're going to start this one with a poll question for our audience, and that should be appearing on your screen now. And you're asked to agree or disagree with the proposition that the increased use of data will require those in my profession, whichever your profession may be, to develop new skill sets, to the extent to which you agree with that. And I'll remind you while you're doing that you can submit individual questions online. Okay, we're closing the poll now and we'll get the results. And we're seeing, well, perhaps not surprisingly, 56% strongly agreeing with that, 39% agreeing, and the remaining 5 or 6% neutral. So nobody, as you might think, nobody is disagreeing with that. So with that in mind, I want to ask the panel now about how the use of data is changing skill sets in the built environment professions. And we do have a question that builds on that from Paul Gotzigan and in Canada and the US. And he's saying, assuming decision makers will increase their reliance upon CRE data as it forms a basis for decision making, what do you predict is the maximum percentage of the decision that data will become compared to the human relationship factors? So the kind of, what's the balance here that might come in between data and human interaction? So that, I think, is a pretty key question for skills.
Yeah, so Dan here, if I jump in, I think that's a great question from Paul. I think actually the answer is difficult to predict. And the reason for that is not because it's uncertain about what's going to happen in the future, but I think it's going to become very much dependent on why you actually asking the question or what do you need. So what do I mean by that? If you look at something like valuations, if you are looking to look across a portfolio of 1,000 properties and you just want to monitor how the value is keeping up, it's much more likely that an automated valuation model approach will feed into that. It'll feed straight into your computer and there'll be very, very little human interaction with that. So in that case, a significant amount of that will be automated and the human element will be relatively small. On the flip side, if you're about to buy a substantial commercial property or you're getting rid of a portfolio, this is where you need a huge amount of human interaction and judgment and insights into why you're doing that. So I think the answer to that is going to be dependent on the process that we're doing. In the past, we said evaluation is evaluation is evaluation. I think in the future, we're going to be looking much more at what does the customer want and what are they looking for, and then it's only then that we can tell the answer. The other thing I was just going to add on the general question about skills, absolutely, I'm all for people knowing more about data and technology, but I also think there's a risk that everyone tries to turn themselves into a data scientist, and I don't think that's necessary. If we look at a slightly cruder example, the real estate sector has changed fundamentally through computers. So just the way that we're sending emails and using Word documents rather than typewriters, the very basic level. So it has fundamentally shifted the property sector, yet pretty much no one in property knows how to build a microchip. And I think there's an element there that people who are offering property advice don't necessarily need to know about how to build a microchip or how to understand data science, but they do need to be open to the fact that it's having an impact and be aware at a basic level of what it can do. And I think that's going to be exactly the same for data going forward, that there will be people, sometimes recruited in specialist companies and sometimes within the real estate sector, who are data scientists, but the people providing the fundamental property advice need to be aware of what's possible, need to understand that it's out there, but don't need to know the ins and outs of it. And so actually, as automation and data replace some of the process-driven stuff, the human aspect of the role becomes more important. So critical thinking and human interaction and empathy become more important aspects and skills going forward.
Thanks, Dan. And I think that's kind of leading in also to a question posed to us by Juris Jovanovic, who said, which I think you're almost implying there, Dan, that will traditional real estate brokerage businesses be endangered in the near future with more tech companies disrupting the market? So, Patrick, what do you make of that?
Yeah, I don't view brokers as being at risk at all of being removed or disintermediated in the near term. I mean, I think you can look at residential real estate as sort of an analog there, and it hasn't even happened there. I mean, we saw a lot of the listings and the marketplaces move online in the form of Trulia and Zillow, and that actually reinforced the brokerage community. I think I saw a stat that the number of professionally assisted transactions, or those transactions involving a broker, basically went from like 88% to like 94%. Only now do you have companies like Opendoor and Zillow, at least in the States, who are basically conducting experiments with iBuying, which is they basically buy and sell the home without involving a broker at all. But I don't think that, even if they're successful, I think that there are questions of whether that will apply to the world of commercial real estate. Single-family homes tend to be much more commoditized and well understood, whereas commercial real estate tends to be a lot more hairy in terms of their analysis for all the reasons we've been discussing. So, and we hope not on a personal level. A lot of our best clients are brokerages, so we're certainly not here to try and disintermediate them.
That's interesting. To some surprise there, because a lot of what one hears is this people believing that disintermediation will come along, but you're saying perhaps in the residential area with iBuying, but certainly not so much of a threat in CRE. Neil, what do you make of that?
So I'm going to be the first one to refer to my previous speaker and say I disagree. So I think that brokers, forgive me those who are online at the moment, but are at risk to some extent if they don't go up the value chain. So if they continue to operate in the same mold and don't accept the disruption and the change, then I do think they're at risk. And how have we got 43 minutes into a discussion about data and transactions without mentioning the word blockchain?
You've mentioned it, so by all means, say something about blockchain.
Well, no, I'm just going to leave it out now.
Okay, so I want to move on to the next question. Maybe this is where blockchain will come in, because the question here is around what are the biggest challenges facing organizations, and how would you recommend they overcome them? So an example here, the sorts of questions that's coming in from the audience are, how do we get better, more complete, more standardized data in the real estate sector? How do we perhaps get access to data through the requirement that it's made public in some way? So these kind of issues, where do they come in? Perhaps, blockchain is part of the answer in this. Who wants to come in on that?
I'll go first if you don't mind, Neil, for once. So I know I keep referring back to the report, but it is the RSCS report, and we are on an RSCS discussion. So one of the conclusions in that and in another report by the BPS was around something around standards. So if we spend our time collecting data and hoarding it in lots of different ways, then we're never going to be able to integrate it or relate it. So actually some form of standardization, and by gum, it's a big elephant that we're going to have to cut up and work through in phases. But something is required around there. And that's not so much about, let's call it the private organizations. I think it's the industry bodies and the institutions who will take a lead on this. I'm not saying they should, because I think they will. And then that will have a knock-on effect in influencing. And we've already seen the standards that the RSCS has produced on varying measures and valuation, etc., that have had global adoption.
Okay, Dan?
Yeah, so I think if I start off with Stephen Spooner's questions, he's put two there, and I think they're both great points and questions. In terms of the British land, yes, I think that's a great example and is still absolutely relevant. In terms of lease data becoming more available, I think that starts becoming a little bit more complex in terms of the agreements that they were originally signed up into. And it's a little bit difficult to go into too much more detail without terms and conditions, but certainly I think the UK government, probably along with the US government, have led the way in terms of open data, and I think real estate is an area that they are progressively looking at more and more, which I think is fantastic. In terms of the biggest challenges for organisations to overcome, I think that I alluded to it earlier. I think the biggest challenge for an organisation is to really engage with what they've got. And as Neil was suggesting about standards, it's an enormous topic, but it's a topic that's going to be growing all the time. And so putting off the decision to try and address this is just going to make it harder and harder. So just some very basic questions about understanding what you've got, understanding what you need, and understanding whether you should or shouldn't be looking after it is a really good step in the right direction. I guess there are other things such as GDPR which are out there, which are real problems, but really they're just about another reason to justify the decision to start really looking into data now from a risk point of view, alongside the whole, it can do an awful lot of benefits and efficiency and cost savings and better services for customers as well.
And Patrick.
Yeah, so I'll jump in. So I agree with both Neil and Dan here, particularly Dan's last point. So one thing that I've seen in terms of businesses that are starting to basically confront some of the challenges and how they overcome them. One, what I've seen, and this is more of a strategy for the big companies, is they sort of a shift in mindset tends to coincide with the hiring of basically a chief information officer, right? And their job is basically to sort of organize and wrangle the base of information that a company has. So doing all those things to basically standardize and get everybody to sort of speak the same data language. And that's challenging, right? Because if you're going to get everybody in an organization to agree to sort of speak the same data language, that's a trade-off, because people are basically going to lose the ability to essentially do whatever they want, right? Like you lose a little bit of flexibility there. I think the other challenges people face is when evaluating tools, because typically you're not going to build everything yourself. You're going to look at working with other vendors. You sort of have to ask yourself, like, with these vendors, is the system that I'm buying open or closed, right? Which is to say that if I put data in this system, will I be able to get it out? Will there be access to an API so that I can basically make the data in this system interoperable with another system? And I think there's a number of other challenges as well. I think when it comes to looking at data quality, I think you have to ask yourself, well, what are the consequences of having bad data in the first place? Or in other words, what is the use case of this data? If you're using data to basically report financials to your board, well, that needs to be pristine. If you're using data to prospect, well, the consequences of having bad data in that case are much less dire. So yeah, I think there's a lot to consider there.
Thanks very much. And I think this leads neatly to a question from Joanna Turner of Canada Life Investments, who's asking how the real estate industry can get over the barriers we have to accessing good quality market data. And she highlights the fact that major property brokers sell their data to clients and therefore have a kind of monopoly on it. Do you see this changing in future so that the data becomes more open perhaps and more transparent, or are people going to basically hang on to the data that they feel they can get commercial benefit from? Perhaps I'll ask that to Patrick.
Yeah, so it's a interesting question, right? Because data custody is a really big issue right now, and I think it's a great point in that brokerages tend to be coming in contact with a tremendous amount of data. From what we've seen of all the different client segments, whether it's lenders, investors, brokers tend to have the highest volume of internal data that they're basically collecting through their own internal operations. So the question becomes, well, can we create an incentive structure to allow them to share that? And to date, it's been really hard because that data is their competitive advantage, right? And so we've had those conversations about sort of data sharing and inter-firm cooperation, and those are hard conversations to have, because if you know that the Reonomy lease is coming due and has an expiration date on this date, why would you want to share that with anybody else? So it's tough. Like we'd have to come up with a system that somehow coordinated the sharing of those materials. I'd love if regulation just took care of it. I mean, in the States, if a property is basically acts as collateral as part of a commercial mortgage-backed security, you have to report everything on it, the leasing data, the expense data. And so in the case of those properties, it's really easy to see what's happening, and there's a lot of transparency. But yeah, so I agree that if we could get brokerages to basically divulge the treasure trove of data that they're all sitting on, that would work. But I just don't see it happening from a game theory standpoint.
Neil, do you see brokerages sharing their data more transparently?
Well, without telling anybody in particular, there are various bodies that are collecting this data, and there have been in small s standards for collecting and distributing that. So if I put it in couch terms, 10 of the top and the bigger practices, the agency practice in the UK, have come together and are putting their data into a system, and that is being distributed. It's not everybody. In the report, we refer to it as a stepping stone in the right direction. It's not utopia, but I can't make a comparison to the States, which is obviously an awful lot bigger. But if Patrick's doing what he's doing, again, I would have thought it's moving in the right direction.
I'd like to also just bring in another question that's come up, which I think is again relevant to this debate. Robert White of Quad, who's a consultant, asks whether this is a risk-related question. Is there a risk that we kind of treat data as some sort of black box process where we stick the data in, some sort of answer comes out, and we don't really understand how or why, and we just kind of accept it. And if you like make decisions in a not very intelligent way, because we just pump stuff into a black box and taken it at its word, as it were, without really understanding the risks and scope for errors. Is that really a challenge, or is the technology that we're seeing coming through much? Are there safeguards against that kind of?
So Neil here, John, I think that refers back to your question about skills and the point that there's still the need for human intervention in a valuable way. So it's those who are challenging what comes out of the box, thinking that doesn't seem right. So what would happen to me? What will happen is there'll be more automated valuation, but there will be an audit and a check within that. And if things are not quite right, then it'll be checked. I forget what the example is, but somewhere I think in a spreadsheet, somebody instead of putting some numbers in, put the date in, as a result of which the box on the bottom right-hand side was out by a factor of about 3 zeros. So it's knowing that the answer is wrong and checking it and going back into it. So we just can't leave it to everything. Back to my point about hello world.
Okay, thank you, Neil. Did someone else want to come in briefly on that one? We've got a few minutes.
Yeah, so it's Dan here quickly. I think that's a brilliant question. I think it's one of the biggest challenges that we're going to be facing as a sector over a number of years, in truth. I think there's something here about regulation, and I think regulators are going to have to play a major role in this, and that is not an easy thing to do because this is not the sort of thing that traditional real estate, it's not the way, the skills, the methods that we've traditionally regulated. So I think that's one thing. I also think there's going to be a part in brand here. So I think at the moment you would often get a valuation from someone who can give you honest advice because of the brand that they work for and because of what that stands for. I think that's going to become more and more important for the technology solutions. But I think it's also a fantastic question, which is one of the major issues that we're going to be facing in the sector for a number of years.
Thank you. I'm going to wrap it up here. I'll just make one more little contribution, which is Stephen Spooner's comment that he mentions standards, data standards in the real estate industry, PICES and OSCRE standards, which exist, but he's doubtful whether anyone wishes to take up the responsibility for the resources to maintain and expand those models. So I'll just leave that one as a comment at this point, as we are running out of time. I want to thank our three speakers today. So thank you very much to Dan Hughes, CEO and co-founder of Liquid Real Estate Innovation. Thanks also to Neil Webster, Director of Remit Consulting. And thank you also to Patrick Rafferty, Vice President of Product at Reonomy. And thank you to everyone who joined us today. Do please let us know what you thought of the webinar by completing the online poll, which you should be able to access. And we also will recommend that you look at the WBF website for further information, more on data and technology, and for details of our future webinars coming up. So do please complete that online poll. Thank you very much indeed, and goodbye to everyone. Thank you.